Welcome back. You're tuning in to Financial Fitness Northwest live on 1150 KKNW, where we help you navigate the mortgage and real estate market with expert advice from knowledgeable and trustworthy industry professionals.
That's right, and it's us.
And it's us today.
But first off, we just wanted to give a shout out to Jerome Watson at Icon Real Estate Group. We're playing his commercial today because he sent us the most leads or applications, actually completed applications from his clients for December at Icon Real Estate Group. So way to go, Jerome. Thank you.
Nice work. Thank you, Jerome.
Thanks so much.
We love you.
We do.
So today we thought it would be really important to talk about basically lending, kind of the difference between lenders and why you should shop for a lender. We've just seen multiple over and over clients coming to us recently. It seems like more and more. That thought they were pre-approved, ended up in contract and sort of in crisis, finding out that they actually were not pre-approved, and then they were scrambling for financing after they were in contract. And so we thought some great information would be to let you guys know what you should look for in a lender and questions you should ask.
Right, and what you should really expect at pre-approval. So, Patricia and I, we actually just had our sales meeting for our branch in Kirkland. We work for Caliber Home Loans in the Kirkland branch. We had our sales meeting yesterday. And, we're always so proud to say we work for Caliber Home Loans, but even more so, our branch in Kirkland is phenomenal. It really attract the best of the best, some of the best loan officers in the industry work there. Our branch closes more business than any other lending institution's branch in the country.
Not just Caliber, but any lender,
any bank, anyone, any other branch. I mean, we're like an entire region of a company, just our branch.
Yeah. Actually, we do so much more volume out of that branch. It's more than double what the next highest branch of any lending institution.
Last year we closed $1 billion. Our branch did,
and the next closest is like what, 400 million or something.
Yeah. So not that numbers are everything, but it's just nice. We're working with some of the best lenders out there. And we're coming across some deals that we're saving from other companies, not Caliber, but and we just thought we should touch on what the difference is. There's a reason why we're so successful and why our branch is so successful and the company as a whole that we're getting this business. So we're doing the due diligence for our clients.
Yeah, we're the number one purchase lender for a reason, and it's because we do a lot of deals. But like Sarah said, I mean, really the point we want to make in that is that when you do a lot of deals, there's a lot of experience there, and no fault to somebody. I mean, we all learn things. Things come up that we haven't seen before, and we learn from that. But since we do have so much depth in our company and so many great loan officers and so much wealth of information, we can solve problems there that maybe other lenders that don't have that, can do. So
right, we do have a lot of resources available to us.
Yeah.
But so that's why we think we should kind of share this information with you, why it's kind of our fiduciary responsibility to arm you guys with the questions that you should be asking your lender when you sit down with them, what you should expect at a pre-approval meeting or after you've received pre-approval. And then, we just want to make sure you don't find yourself in a similar situation as these other loans that we've been, continually saving.
Yeah. Yeah, I mean, it's nothing worse. It's stressful enough, right? You're moving your family, you're buying a new home. The mortgage process in itself is not for the faint of heart because it can be a little bit taxing on your nerves and patience.
Time consuming. Can be like a second job. You have to be really paying attention to what's going on.
Yeah, but I mean, you get into this and you want to make sure, certainly when you get into contract, that you actually are a pre-approved buyer. And so we're going to go into some of the things that you should do. And number one thing is we feel you should talk to more than one lender. And we're saying that as a lender. But, everyone's a lot of people have certainly an agent that's referring someone to them. They might have a friend. Maybe they have a friend of a friend that's in the business. So
right. It's just important to, you only know what you've experienced with that one person and what they're telling you. And it may seem like they know what they're saying because they come off confident, but that's not always true.
Yeah, maybe they do, but maybe they don't.
So it's good to find out and make sure you're getting provided with all of the information. like Patricia mentioned in the beginning, a lot of what sets lenders apart is their training through their company, but also just the variety of loans they've done, because you only know what you know.
Yeah.
Right?
You might go to somebody and maybe you're a jumbo buyer. Maybe you're a first time, buyer, and you are in the jumbo market, which is happening a lot in our area because a lot of tech industry and kids are coming out of college and they're making really good money when they're, in the tech industry. So, it's a totally different animal, and not everybody knows what they need to know about jumbo financing.
Right.
And if all they've done is FHA loans, they're not going to really have a clue about how to do a jumbo loan.
And they might be able to do it just fine, but it might be pretty painful for you.
Yeah.
Yeah.
You might get through it, but
You might not be enjoyable. So some things, don't be afraid to ask your lender how long they've been in the business. What is their experience? I don't know if you have to come out and really say like how many loans do you close, but it's kind of, I think, a good indication if someone is a successful lender is, do they have a team? Do they at least have an assistant that just works for them? Because, you have to sustain a certain amount of volume to have a team.
Right.
And so that means that you do a variety of loans. You're pretty successful. If you're going into a bank, it's a totally different animal. But because, they don't really have that much control over their files at all. But in the private mortgage lending world, it's different. And all we run our own businesses. And it's a big deal to have other people that can help service you, your level of service, the efficiency that things are going to get done, because it's not a one-man show.
Sure.
Right?
A lot of people will go, oh, well, I bank with B of X, let's say. And so, of course, they have my checking account, so that's where I should go get pre-approved. Well, not to pick on any one bank, but that's just not always the case. I mean, they might be really good. Whoever your institution is might be good at checking and savings and CDs, but that doesn't mean that they know really how to do mortgages that well.
Right.
And
actually, the banks really do a lot smaller amount of mortgages than private lenders do.
Way smaller. They don't necessarily, a lot of them don't even want to be in that business to the level that someone like Caliber is. But also, the other thing with working with a bank is that your loan officer may be, a bank. They're a banker, so they have banker's hours, and a lot of real estate's done nights and weekends. So it's good to know that you have a loan officer that's going to be available on, Sunday afternoon when you want to put that offer in and you need a pre-approval letter.
Oh, yeah. I mean, just last night, every night. I get texts constantly. Last night, I get text at 10:30. I need a pre-approval tomorrow morning by 7 a.m. Do you think that a banker is texting people back at 10:30 at night and responding at 7 a.m.? No. They work bank hours.
Yeah.
But, I think that I really feel that probably most people, when you get a referral from like an agent or a friend, you are probably most likely getting referred to a private lender.
A mortgage lender, yeah. A lot of times they are.
So those, I think, asking about what kind of staff they have and is something important, and the service level you're going to get, receive throughout the transaction.
Another thing is the products that they offer, because a lot of
Right.
Different lenders have a different, group of products that they can offer you. And Caliber has about 50% more products than most every other lender, because we do have a whole suite of portfolio lending products that we do to solve out-of-the-box problems. So.
Which is why we keep saving deals.
Yeah.
And another thing is how quickly they can close. And so, one thing, another reason, there's so many, we're proud to work at Caliber, but we close loans very, very quickly, faster than any other lender. And the reason is just because we have so many resources, our processes. And so being able to, close a loan quickly makes your offer really more competitive and puts you, ahead of other offers when you're in a multiple offer situation.
Yeah. And a lot of the reason that we can do that too is because we do have, all the underwriting, processing, funding is right in our office. So that's another thing to ask, the lender that you're working with, where is my loan underwritten? If they tell you that their underwriting is in Texas, then, that's something to consider. There's a delay. There's a time difference. There's going to be a delay in information, and they can't walk down the hall and talk to their funder if they have a question about something.
Right. It's very different. And then I guess, let's see, another big misconception I feel like is people think when they're shopping lenders, they're shopping rate. And that's not necessarily the case and hasn't been for a while, because, we're all so regulated now that our rates are really within an eighth of each other. So you're not so much shopping rate as you're shopping program and service levels.
Yeah. Really, I mean, in really service and in this competitive market, like Sarah mentioned earlier, is their ability to close. So maybe you are an eighth higher in rate, but you actually win the deal and get the house. That's a lot better than
And not getting a house.
saving an eighth on a house that you don't get because you can't win it with your pre-approval from a bank that's maybe not going to be recognized very positively from the listing agent.
Right, right. So another thing is that, I feel like we should cover when you go in and you get pre-approved. So like you've taken an application, what does the process look like? Because what I'm finding, and you're experiencing this, is that clients, they talk to another lender, they take their application, maybe a week or 2 weeks later, they get pre-approved. And then the lender just sends them numbers, an email of like, here's your option. Here's the different rates for that option. And that's it.
Yeah.
That is not what a pre-approval should look like.
No.
So what it should look like is you take an application. You should be pre-approved within 24 to 48 hours of your application, depending upon the complications of your loan. If you're self-employed and you have to review tax returns, it could take a few days, but it shouldn't take too long. And in that entire time, you should be in communication with your lending team.
Mm-hmm.
And then when you're pre-approved, at that point, you should be sitting down with your lender.
Yeah.
Like either in person, a web meeting, a phone meeting. Pre-approval should not just be getting numbers sent to an email box.
And it shouldn't be an email at all. It should be a loan estimate that breaks down your loan amount, your fees, everything. It's estimated, obviously, because you don't have a property yet. But you should have a full understanding of what your loan program options are, what the fees for that program are. Are you paying a discount? Are you not paying a discount?
What does that mean?
What does that even mean? I mean, we just find so many people come to us and they do not have any understanding of what they even have.
No, because they're just sent an email of numbers. Nobody is actually going through item by item, explaining to them what they mean, where those numbers are coming from. And also they're getting sent one option or, with different, rates or something. But you should be sitting down with your lender and going over all of your options. Maybe they don't all make the most sense for you, but you definitely have more than one option. And so understanding why you're choosing the choice you are, you should be fully armed with all the information so that you're making an educated decision on your investment.
Yeah. Biggest purchase you're going to make in your life, most likely. So
right. I mean, if you had $500,000 and you were going to give it to a financial planner to invest in the market for you, I'm pretty sure you would take your time and meet with a couple people.
Yeah. Know where it's going and
understand what's happening with your money. Same with buying a house. So that, and then what I'm also seeing is that the other thing we cover in our pre-approval meetings is, what you can expect. Now you're pre-approved. What does that mean? What you can expect moving forward in your communication with our team. And then when you're in contract, what happens next? We go through every step. So many times we have people that come, they've talked to someone else and they're like, oh yeah, they have no idea. They haven't explained what escrow is. They haven't, just those simple things. Those should all be explained to you. You should leave with a packet of information.
Yeah, exactly. You should know. I mean, you don't have to know everything that your loan officer knows, but you do need, it's really important that you have a good understanding.
Absolutely.
And they should be, you should also want to make sure that your loan officer is setting the right expectation for you because, like I mentioned earlier, it can be a challenging process. The documentation can be challenging, but if they let you know up front what to expect and all the things that you're going to have to provide, for instance, are you self-employed? That's going to be a different level of documentation.
Right.
Do you have rental properties? Do you receive trust income? Do you need to really sit down with a person and go through all of this information to make sure that there aren't any snakes in the grass that might come up and bite you later.
Right. And that's what's happening on these deals is that piece is missing. But I like what you just said because you know what? That's another indication of a good loan officer is how many questions do they ask you? Because there are so many things that we need to know. And a lot of times I think that as a buyer, you don't necessarily know what information to give us.
Right. You don't know what's important.
Right.
And it could be really important.
But just so you know, everything's important. So don't ever try and hide something or not share information and think that they'll just know what it is. You should arm your loan officer with everything.
Yeah.
Because it will all come out eventually. And then, better to know before you make an offer than after you're in contract and lost your earnest money and your appraisal cost in the house.
In the house. Yeah. Even if you think it doesn't matter, don't ever think that this probably doesn't matter because it was, 5 years ago. Anything that you can think of with your income, with your credit,
your assets.
anything, your assets, it's all good to just just have the conversation with your lender and make sure they know everything.
Yeah, because then they can, preempt any issues and get all the stuff from you up front. So when you do find a house, it's easy.
So much less stressful
Yeah.
on everybody.
Which brings up another point that if your loan does have any little tricky features, maybe you're self-employed or you have some weird out of the box compensation plan with your company or, anything like that, your lender should be taking the next step and underwriting your loan.
Absolutely.
There is absolutely no reason to not underwrite your loan. You should know ahead of time before you go house shopping that your loan is completely approved and there is it puts you in a really good position. You can close way quicker, 10, 15 days. You also can release your financing contingency because your loan's been approved. And you have no doubt when you're out house shopping.
So that's an important question to ask the lenders that you're interviewing because some lenders do not underwrite to be determined properties. They might not do a pre-underwrite on that. So you want to make sure that you are working with someone that will underwrite your loan before you have a property.
Mm-hmm. Yep. So, well, we are about at our time. Is there anything else that you can think of, Mom, that you think would be really important to add?
Well, I guess I would just say one other really important thing is that while we're saying you should definitely talk to more than one lender and get a really good comfort level with the lender that you choose, you should choose that lender before you go into the pre-approval process.
Oh, yeah. Or at the pre-approval process.
Yeah. I mean, when you're first starting to get pre-approved, that's when you decide. It is not good for anybody to continue to keep 2 or 3 lenders on the hook all the way through once you have a contract and everything. It's going to make it way worse on you. It's going to potentially blow your deal. You need to submit your offer when you find a property with the pre-approval letter from the lender that you choose to work with.
Yes. Once you submit, a lot of times, we know for sure, because that's the feedback that we always get, is that Caliber, we do more purchase business than any other lender. And when you submit your offer with a Caliber pre-approval letter, it wins the deal for you. It helps you win the deal. It just happened last night.
It does. Agents literally email us back and say, oh, thank God you're working with Caliber.
Yeah. Sometimes they tell we've had it where they've told the person, we'll sell you this house, but you can't work with this bank. You need to get your loan through Caliber and you can have it. And then they've gone through us. So it's really important. And so you want to make sure that you, number one, or at that point, you can't switch lenders.
Yeah.
You have 5 days legally by the contract to switch, but you have to ask for permission from the seller. And if you use a Caliber pre-approval letter and then you're like, oh, I'm going to try and shop rate now, that's not a good idea.
No, it's not a good idea
you
for
shop
anybody.
Rate, program, lender at pre-approval, and then you commit to the one person you're working with once you're pre-approved, and that's who you work with throughout the transaction. That's a good point.
Yeah.
Yeah. So if you have any questions or you're wondering, maybe you need a second opinion, please don't ever hesitate to reach out to us. We're happy to just help you give our opinion and make sure you're in a good position. We've had callers on the show before that have emailed us and we looked at their financing and said, no, you're in a great loan.
Yeah, there are good lenders out there. You just want to make sure that you're working with one of them.
Yep. So
awesome.
Yep.
Well, thank you so much for tuning into Financial Fitness Northwest. When we come back from the break, we'll be chatting with Vicki Hilty and Karen McKean from Domestic Violence Services of Snohomish County. To find out more about topics discussed on today's show, you can find us online at www.financialfitnessnw.com.